My name is Julia and I'm a co-founder at Proptech Collective.
Hi, everyone. My name is Kinda and I'm a senior associate at Dentons here in Toronto.
We're joined today for our first Spotlight series, which is brought to you by Proptech Collective and Dentons by Khushboo Jha. She's the founder and CEO at BuyProperly and has over 10 years of experience at Amazon, Deutsche Bank, and Accenture. She's now spending her time building BuyProperly to democratize real estate investing, and we couldn't be happier to have her on board. Khushboo, hello, welcome.
Hi, thank you for having me.
It's our
Thanks for joining us.
pleasure. How about we started off with you just telling us a little bit more about yourself and your background?
Absolutely. So right now I am on the entrepreneurship path, slogging it every day. But I started a standard conventional career path all my life. So I did my undergrad in India, studied engineering. Post that, I did strategy consulting at Accenture, a lot of market entry, product launches, because it was an expanding economy, a lot of companies coming into the country. Post that, I moved to the US for my MBA, did my MBA at Wharton School, University of Pennsylvania, and then joined Amazon. I think I was very fortunate to join Amazon because I got to launch 2 businesses with them. So it was super convenient because I could learn how to launch a business in very resource constrained environment while having the safety of a company like Amazon with you. I got to work in US, UK, and then Canada, and kind of learned how to build a cross-functional team, launch launch new business line in one geography, then take it to other geographies. And while you're doing all of that, also leverage AI as and when required. So that was a great learning ground for me as I spent my years there across multiple countries as well, which is what kind of set me up better for my startup journey.
That's amazing. Maybe you could tell us a bit about your founder story. So obviously you had the opportunity to start different business lines at Amazon, and so you had some exposure to, I guess, entrepreneurship, and you mentioned the safety net. But maybe you can tell us about like what caused you to take that leap of faith, and why did you decide to start BuyProperly?
Yeah, sure. So during my MBA, I majored in finance, and I worked in Deutsche Bank in an M&A team. So I was very familiar with real estate finance. I studied a lot of it. But then I myself wasn't investing in real estate because I didn't have as much money. I had a ton of student debt. And when I moved from UK to Canada, the first reaction I had from moving from there to here was like, oh, this place is cheap, darn, like this, my rent went down from what I was paying in London when I moved to Toronto. But then reality started sinking in. It was not as straightforward as that. Real estate was really, really expensive in Toronto. And so by the time I was done buying my house, it was like, this doesn't make sense. Like the process isn't fun. It is not nice. People weren't respectful to me. Like this was my hard-earned money. I wanted to invest in real estate, and it's not like I was struggling to make ends meet. I had some savings. I had paid off most of my student debt. And so that made me think that, okay, if I am in this sport and I am doing okay, then there are probably a lot of people like me out there because I'm pretty average. I'm not on the lower end of the thing. I'm quite median as far as earnings go. And that's what got me thinking. And UK had tons of innovative financing models, rent to buy, sharing of down payment. And of course, I had seen a lot of marketing around it where things were quoted in weeks rather than months and years of EMI to make it sound cheaper. Like there's a lot of creative financing to help people get into real estate. So I started looking for that in Canada, and I couldn't find as many options. I was like, okay, even if I have some cash, I don't have a couple of hundred grands or $1 million. I have some cash. I didn't have a choice to put it in real estate. And I wanted some because I used to work at Amazon. So I had stocks. So I was already in the stock market. And those stocks are great, but I wanted to diversify and I couldn't. It wasn't a choice. So that's what prompted me to start BuyProperly. But it was not just my problem. I went and spoke to at least 150 to 200 people before I decided to leave my job and actually start this, because then I realized that this problem is real. It's quite
Mhm.
common and it is across the board for Canadians. It's a very, very common problem that people want solved, but there isn't a simple option.
Hmm.
That's
Yeah,
what led me to
it's
start the BuyProperly.
it's really interesting that you say this. I think we have a similar journey. I also lived in London and came back to Toronto and was completely surprised, at least in a happy way, by the rent prices, right? But totally agree with you when it comes to actually buying real estate. It is extremely expensive, and I think I think I'm going to be part of Generation Rent. But thank you. This is why I'm so excited to have you here, because I'm really interested to kind of have you explain to our audience, so someone who's maybe not as familiar with fractional real estate, just what is it, if you were to describe to someone who's not in the industry, and how exactly has the fractional real estate market evolved in Canada?
Yeah, so a good way of thinking about fractional real estate is like comparing it to buying stocks. You don't buy the whole Apple company or Amazon as a company or Google as a
Right.
company, but you can buy shares. And by buying shares, which are much more affordable to buy, you're actually being able to get the upside of all of the effort that the company is doing. You don't actually work for any of these companies, but you get to reap the rewards by putting in your capital. So fractional real estate works the same way. And actually, that's our intent, to make it as simple as buying stocks. So you're effectively buying shares of a house, so to say. So there's a company, equivalent is a house, and you're buying a portion of it. So say you own 2% of that, you would get 2% of the rental, 2% of capital appreciation. So everything in proportion to 2%.
Hmm.
That's how fractional real estate works. I'm sure people have been doing offline deals where four friends got together and split it, but it is pretty ad hoc the way it would happen now, and not everybody has four friends with
Mhm.
money who would do it with them. So a platform like ours, for example, says, okay, it's like buying Amazon, Apple, Google shares. You go online, choose the house you want, choose how much you want to put in, and that's it. Check out with it, and you get the investment documents. Simple. So the idea is to simplify that whole setup and
Hmm.
letting you access um, properties that otherwise you wouldn't, because even a one bedroom is like 500K in Toronto. So if you're
Mhm.
doing a down payment, you're talking 100 grand or above for anything. And
Yeah.
I think one of the reasons that this is still not a big
Hmm.
industry or a big setup in Canada is primarily regulations. So
Mm.
regulations have been very protective of the current setup. That's their job, to ensure that there's not too much change, too much flux, to protect investors. But that also sometimes has delays innovation, and these changes in regulations that would allow for something like a fractional to be done or made available to customers, say happened about 8 to 10 years in US, about the
Mhm.
same time in UK, and happened about 2 3 years ago in Canada. So
Mm.
now you would see more startups offering options such as we are offering, which is regular retail people being able to invest. So we, for example, start as low as 2,500. A lot of people
Wow.
can save 2,500 and invest. The startups are still evolving, because a lot of the earlier options in Canada had a very high minimum tag. So even if you did fractional, the minimum was like 100 grand. So it
Mhm.
wasn't for commonplace retail investors. It was for people who had wealth.
Hmm.
And so that's how I think, given now, you would see a lot of evolution that's very customer friendly for regular investors come into this space.
That's that's really interesting because um, you speak about how to date the real estate market in Canada, even the fractional real estate market has been limited to those people who have a certain spending power. So whether they're corporate investors or just individuals that are high net worth or earning more than the average. Um, why do you think it's important that, your everyday retail investor is able to invest in real estate? Like, what is it that really drives you to build something like BuyProperly?
So real estate is a hard asset. It is one of those assets, like the house is not going anywhere. It's not going to go down to zero. It's going to retain value. And if you're thinking about investing, people buy gold, people buy silver, people buy stocks, people buy bonds. It's just real estate that they don't think about. Nobody wakes up and says, oh, let me buy some properties today morning. Because it's not possible. We want to make that happen. And the reason everybody needs to invest in real estate is so that they have a risk diversified investment portfolio. So if you have $100, there's a common saying, you shouldn't put all your eggs in one basket. It is about that concept. It's like, you don't want to put all your savings in the bank, which will actually give you like 0.25% interest. So though your wealth is not growing, you're actually losing money. You can put it all in stocks, but then that's also not ideal. And if you go by gold standard, which is say an endowment fund like Yale, which is considered gold standard in the industry because they have beaten S&P 500 and everything put together for the last 30 years. So if you go by that, they annualized for the last 30 years is 12 and a half. For S&P 500, it's like around 10. Everything else is way lower. And so if you go by them, the reason they were able to achieve such a standard thing is because they reduced volatility through investment in real estate, which is what it does. You can make a lot of money with GameStop, but maybe you can also lose a lot of money with GameStop. And so having some money in real estate ensures that you're making consistent returns and consistently growing your wealth. That's why it's important for everyone to have some real estate.
Yeah, and I think it's interesting, especially BuyProperly, as you continue to scale, if you give people the access, to get those Stanford alumni endowment returns, that would be amazing. But I guess to kind of switch the conversation a little bit more towards your entrepreneurship journey, I guess building a company and myself, like I have a lot of experience in the accelerator space. And I've met and spoke to thousands of founders by this point. And I love asking this question because there's always a fresh perspective. So I guess, what has been the hardest or most unexpected thing about taking this entrepreneurial path for yourself?
I could go on and on. It is hard. It is fun, but it's also hard. I think coming from a very conventional career path, like good college job, sort of a thing, it is a very humbling experience. You get a lot of no's. And it's okay because with every no, you're also learning, and you know that, but it's still hard to hear a no from a customer, from an investor, from somebody you're trying to hire to your team, and you have no money to pay them. So I think that's kind of tricky. And then you are the startup founder with like mighty vision. It's like you are a $1 billion company trapped in a $50K company's body. You have all of these ideas and vision, and you want to do this and that overnight, but then you're constantly having to let go some of those ideas and like, okay, not now, at the right time. So that struggle is another one that I find is very particular to entrepreneurship. Of course, you have to prioritize all the time, but it's way harder because some of these are like literally your dreams or your team's dreams, or like somebody comes in very passionate about something and you're like, we can't do that
right now. Yeah, aligning incentives as an entrepreneur is definitely magic. So I guess also I'm curious to understand what the best part of entrepreneurship is as well for you.
It's exciting. I think, there's launching the business, there's all of making good money, but I think the adrenaline rush of bringing an idea to life, like solving a problem, getting a customer, that adrenaline rush is not achieved in anything else. Like I've managed a large P&L, launched products, business, all of that stuff. It's a different game altogether, I would say. because you think of something and then you actually see a customer get happy. It's like, oh, this is interesting. When a customer sent us a happy email saying, oh, this is addictive, I just made an investment in a second property and I feel like I will keep doing it till I can. It's nice that it's easy. I think it's very satisfying to think that whatever you sort out to solve, you were able to solve, and pretty exhilarating.
That's amazing, actually, because I think a lot of founders speak about that piece of the puzzle that you don't really get to experience when you are sort of working for someone else or working for a much larger organization. Like you're really at the forefront, and you're like leading your team through, frankly, through darkness. You don't necessarily always know what's next. As a founder and as a woman, I'm curious to know whether you felt as though there were any challenges that were sort of extra difficult or particularly difficult because there are so few women founders, and whether you faced any challenges in fundraising or raising capital in a way that you didn't see some of maybe your like peers or other entrepreneurs that were men were experiencing. Just because, at Proptech Collective, I think there is a goal to grow the diversity and to bring, men and women and also, people from all different backgrounds together to discuss Proptech and be together in the ecosystem and support each other. But I think often the one thing that we miss is talking about the challenges that are specific to certain groups. And so making sure that we raise those, especially to our audience that may be listening or watching, and maybe experiencing some challenges themselves right now.
Yeah, this is kind of a question that's a tricky one for me to admit, but I don't think I would want to sugarcoat this either. Yes, there are challenges. Like, I think this is the first time in life that sometimes I feel that just working harder, playing by the rules, I can do everything and it may still not go in my favor because of biases. This is not something that you experience as much in a job or in school or anything. So it's kind of, you're not prepared that you can play by the rules, hit all the milestones, and still the conversation would be very different. I think raising capital, there are not enough women founders who can say how you navigate that piece.
Right.
The experience that men founders has been very different. Like, I get a lot of advice and guidance, and there are a lot of good people trying to help. But what they tell me and what I experience is so different. I mean, I majored in entrepreneurship in my B school, and I speak to all of the founders and take their feedback. And the feedback was often focus on the vision and talk about the vision. Talk about it to me, and I can talk for ends about how big my vision is. We want to build a real estate exchange, like you have a stock market exchange. But my conversations never go towards the vision. They are always on the risk side. How do you de-risk this? How do you de-risk that? And I know now that those questions would come, so I go prepared. So by the time I have a second meeting, like, hey, these are the 5 things you talked about. This is how we've already de-risked, and this is how we plan to de-risk. But the conversation somehow is making me play more defensive. Of course, we are a startup. There are a lot of things that can go wrong, but then there are a lot of things that can go right. There's this huge market. There's so many people who can be helped. There's so many customers who are excited. We have customers who keep coming back. Like, our repeat customer story is something we had never imagined. People who've invested with us just keep coming back again and again and again. Like, they haven't done one and that's it. They keep coming back. It's like they're buying on Amazon, and that's great. But I don't get to tell those parts of the story. So that for me is a big challenge with this whole capital fundraising side of things. Is not enough questions are on the vision that I have, the team that I've built, and how the team is working like a family. Like, my team wouldn't care if we weren't able to actually run payroll for 3 months. That's how
they're bought in. They
Yeah,
are
that's how
bought
they're working.
in.
They are completely
Yeah.
bought in. We didn't pay anybody anything for the first 2 3 months. It was all based on trust that when we raise capital, everybody would get paid exactly what we have agreed to, and that was okay for people.
Yeah.
That shows how the kind of culture we have. But
Yeah.
I think the focus is too much on, is your ARR 100K yet? Not yet. We just started like a few months ago, sort of a thing. So that's what I think is a big challenge that I face as capital fundraising. But that said, there are a lot of women out there, I have to admit, who I have encountered in my path, who are doing everything that they can to help me out. Like it's
That's
like they're
amazing.
always thinking about me. Even when I'm not thinking about them, if they see something that's relevant to me, they'll send it my way. If they can nominate me somewhere, they will. If they can do whatever little bit they can, they will make sure I get that support. And I'm really thankful to a lot of such women, and there are men who are doing that as well, to make sure that we are able to, as a team, achieve these goals, and the company comes ahead of the found agenda.
Yeah.
That's
And it's
that's
it's
awesome.
it's awesome to kind of hear you that even though there are so many challenges that you're kind of encountering in this process, that you keep on staying resilient, as I hear, and just basically building up a story to make sure that you're kind of overcoming these challenges, which I know that all entrepreneurs will get, right? And one thing that I'm walking away from this conversation with is also this kind of focus you have on data and bringing the
Mhm.
data to back up your claims. Because I think that the moment that you have those proof points in markets, as you said, like repeat customers that are always coming back, those stories, if crafted properly, can really bring you to the next level, which is amazing. I guess speaking of the next level, you're here. We're here to help build a platform for entrepreneurs like yourself. So curious, what's top of mind for you as you continue to look to grow your business into 2021? And do you have any asks for our community on how we can be helpful to you?
So I think the top of mind for us right now is just spreading the word. We've spent um, a lot of time getting the product right, getting the legal structure right, because it's a securities product. We wanted to nail that down, make it scalable, templatize, like all of that. So laying down the basics, the foundation of the business. And now it's about shouting from the top of the roof. So spreading the word is top of our mind. And that we ask from the community is like, just share the word about us.
That's awesome.
That's it.
That's great. And it's great. Can you just let us know where that community can find you? So you're obviously on social media, and is it buyproperly.com?
Yes, .com.ca, either of those would work.
You have them on .uk soon, maybe co.uk.
Yes,
No.
.co.uk.
No, that's great. And for this is kind of a little bit of surprise. So as we said that you are our first guest, and we like to do something a little bit more fun as we approach the end of our interview, which is a rapid fire question. So these are basically the first things that come to your mind. So Kenda and I are going to alternate between little quick snippet questions, and whatever comes to your mind, just kind of say it out there, and yeah, just I'll kick it off. So first question, where did you grow up? Nice.
India,
Whereabouts in India? Awesome.
Delhi.
Awesome. I've been there.
Awesome.
It's really cool.
Likewise. What is your favorite place to visit in your hometown?
So there's an old fort which is inside a park, and nobody knows about it. But it's so cool because it's a fort inside a park, which is my favorite place. We're close to my house. You can just go for a run and see the history at the same time.
Yeah.
That's really cool. Now,
Good.
well, now you've just told the Proptech Collective community about it, so no longer a secret.
And I've been to that fort. It was really cool. I got stuck in the rain actually in that fort, and it was the most magical experience I had. So yeah, it kind of transgresses between times, which is really cool. Question, does your name have a special meaning?
It means fragrance.
Oh,
Nice, very cool.
very cool. Are you a dogs person or are you a cats person?
I would say dog. They just give you so much
Nice.
love.
And loyalty. Yeah, right now I feel like the pandemic, everyone's getting dogs. And then I guess to close things off, who would you say your hero is?
I think, I don't know in terms of role model, but I think I take a lot of inspiration from my dad. Um, he doesn't realize it actually, because he's been telling me lots of random stories growing up that I've learned a lot from. So if he wanted to tell me that I need to be good at things, he just pointed out that even if you were at the Olympics and you were not on the stand as ranked as 1, 2, or 3, nobody even takes a photograph of you. And you were probably like way too good, and yet nobody cares. So when you're playing in top leagues, you still have to be like really good for anybody to care. Uh, that kind of stories, and yeah,
That's
sort
really
of
nice.
taught me. Uh, that's why I think, yeah, pretty inspiring.
It's amazing. Supportive dads are always, they're the greatest, you know? You can go back and always ask and seek for advice. So, Khushboo, thank you so much, honestly, for spending the time and taking the time to share your story with us. As I mentioned before, if people want to learn more about your company, please visit buyproperly.com or buyproperly.ca as well. Many thanks as well to Kenda and Dentons for helping us bring the Spotlight series to life. For all our listeners, if you share the same values as we do at Proptech Collective and have an active interest in building up your professional network in the PropTech ecosystem, we'd encourage you to join us as an official member. We have free and paid memberships on our website for both PropTech and real estate companies. So feel free to go on proptechcollective.com/join community to learn more. But without further ado, thank you so much, Khushboo and Kanda, for joining us today. And we look forward to hearing more about your stories soon in the market.
Thank you so much. Thank you for having me.
Thanks so much. Thanks, Khushboo. Thanks, Julia.
See you.